Hey folks, Dan Frio here, the Mortgage Update. Today is March 26, 2020. So let's get on to what we're going to talk about today. My name is Dan Frio. I do the Mortgage Update every day. So let's get to it. And then at the end, for all the newbies, I'm going to explain what the MBS market is that I'm talking about this whole time. So bear with me. So the MBS market, as we see here, is up fantastic. Okay. But unfortunately, there's not a silver lining at the end of this story. So bear with me, and I hope you locked and you're working with me. And some of you guys I reached out to and said, let's hang on give me 4, 5, 6, 7 days. It's going to settle. And I'm going to explain to you what's going on right now in the markets. So MBSs are up 48. So what happened throughout the day today? Well, the market opened. Let's go all the way at the beginning of the day. Initial jobless claims came in, and we're expecting about 1.5 million, because we're thinking, okay, a ton of people are getting laid off because of the epidemic and all the cities shutting down. Well, 3.2 million, double what was expected. So here's the fear here, or here's what the assumption would be. Stock market crashes, mortgage-backed securities rally in record territory because people are fleeing to safety. Plus, the government is also jumping on the bandwagon, help keeping rates down low. So let's see what happens in the first tranche of things. Oh, also GDP came out at 2.1%. That was expected, but that's second quarter, that's old news. So we won't go there. So the market opens up 288. Unemployment was double what was expected. Mortgage-backed securities are down 22. This doesn't make any sense. So let's keep on looking throughout the rest of the day. The next thing we come up with, all of a sudden midday, the market rallies up 1,000 points. And then we see MBSs start to rally. This we expect. We expect this. This is completely baffling, okay? Then the day goes on. Every day they have they sell off treasuries, every day they're selling bonds. And basically this was just a snapshot of what happened today in the bond market. The stocks end the day up 1,300. Crazy. Mortgage-backed securities end the day at 53, but then as it settled in and everything settled, all trades finalized, it was up 48. Love the number. Okay, so unemployment came in double what was expected. Stock market rallied, and the mortgage-backed securities market rallied. Baffling. So let's go through it, and basically I recapped it. 3.28 million people lost their jobs, or I won't say lost their jobs. They're temporary. Let's see, for I'm in Chicago. There's a lot of laborers that in the winter can't work. So they get unemployment for, maybe November, December, January, February, and then they're back to work full-time the rest of the year, and it goes on. Basically, let's look at it that way. These people aren't out of work. Hopefully you're not out of work. You're just kind of on a sabbatical. We'll say it that way. And no disrespect to anybody, but basically what we're trying to do is, once everything settles, you'll be back to work. So hopefully a lot of the stimulus plan that took place and got voted in today and approved, and that's why I know we saw the markets rally. The House passed everything. It's going to go to the Senate, and the Senate has there shouldn't be any resistance there, so it should be on the president's desk probably tomorrow to sign, and then checks will start going out, and unemployment benefits will start kicking in and everything. So I think it just eased the market, people were just saying, you know what? This is basically, if I had the flu and I had to take 2 weeks off of work, this is what would happen to me. But unfortunately, it's happening to millions of people. So again, it's not like an economic collapse of what we saw back in 2000, 2008, 9. This is we'll rebound much, much, much quicker than we did before. We should, okay? So let me get on to, I won't ramble because I don't want to be on here all night, because I don't want to talk economics of what, manufacturing numbers and GDP and all this other stuff. I basically want to explain to you some of the things that's going to happen. I'm going to come out with a more detailed report tomorrow to give you the inside of why a lot of lenders right now are actually raising rates and raising them, they're skyrocketing them. And you're having a lot of lenders right now, they don't want any new loans, and they're not funding loans. So if you have a pre-approval out there, be careful. I would get a second backup. I would get a backup in the event that the lender you're going through, one, runs out of money, two, just shuts off their services until this goes through. We've had several occasions where we've had people call us frantic. They were supposed to close, and they were at the table halfway signing their documents, and all of a sudden they came in and said, "Halt, we apologize, but we can't finish this transaction. Our money supply has just went gert." So get a backup. It might waste an hour of your time, and you might waste an hour of my time. I don't look at it as a waste. I'm here to help. So if you end up not using me, but I was a backup to help you, maybe you tell your neighbors, friends, family, somebody else about, hey, Dan was willing to do this for us. We didn't end up using him because of this. We would have used him, maybe, hopefully, but make him your number one choice this time. Instead of trying another place, because I can almost assure you my rates are better, if not equal to the anybody else out there, as well as our costs. I think by the time I got in the office this morning, we had 9 loans to look at for people that had pre-approval somewhere else or loan estimates. And I think we end up doing, I can only not do one of them. And then by the end of the day, I think we had 11 more. So we got about 20 files in today. That we beat mostly everybody that was out in the market. What I will tell you, and what I'll go over tomorrow in my in-depth analysis on what's going on behind the scenes, is rates have spiked with most lenders right now. But the fear is with a lot of servicers, and let's go to this. Some of the news out today was REITs, mortgage-backed securities. Look, invest in mortgage bonds and mortgage-backed securities. A lot of companies are buying on margin, meaning buying on credit. As the values of these bonds go down, they're getting margin calls and so forth. So it's hurting a lot of companies. Some of the bigger companies such as Quicken and Mr. Cooper, they're huge out there. As people start missing payments also, it's going to put them in a really bad spot. I'll explain that tomorrow. So stay tuned around noon tomorrow. I'm going to go through that in-depth. I might even do it live. I'll send out alerts so make sure you click down below and hit the alert button. I might actually do this live, see how many people jump on board and maybe ask some questions. But if not, it will be videoed and saved on my YouTube channel. So this is the people missing mortgage payments. You can go all over the web, and it's going to really, really affect mortgage servicers. So what they're doing right now, a lot of them are raising their rates, raising their fees to compensate for missed payments. Because if you don't send in your mortgage payment, well, there's still interest due on that money from somebody to somebody. Who's paying it? And that's where a lot of these servicers are really going to get clobbered. And shouldn't put anybody out of business, because as usual, the government will step in and make them whole, even though their executives are paid astronomical money and should have a war chest of money set aside for some bad months, but they don't. So it is what it is. So basically, mortgage-backed securities are up big today, but you might not really see a huge variance in the mortgage rate that somebody has quoted you. So reach out to your lenders. You can even reach out to me if we have not locked you in and say, hey, what's the update for today? I have no problem getting back with you and saying, okay, here's where we are right now. The frustrating thing is I get this a lot. I had one young lady send me a conversation back and forth via email that she had with her loan officer. And he was like, well, you know what, just don't worry right now. Just go ahead and put everything in. Let's get you finalized. And by the time we get you to the closing table, I'll let you know what the rate is and fees. You'd be nuts to do that. Absolutely nuts. So let me know. Again, my name is Dan Frio. I do the mortgage update every day. The best way to reach me is 844-775-LOAN, and loan is 5626, or shoot me an email at dfrio, which is FRIO, at preferredrate.com. Here's what I need from you. If you're in the middle of a mortgage right now, your lender is required by law. It's not if they want to do this or not, they have to send you a loan estimate. It's basically a 3-page document that goes over your rate, tells you if it is locked or not, and if it's not locked, check on it every day to see where you're at. It'll also go through on page 2, top left, it's going to go over the fees they're charging you. Be careful. Again, I know I say this every day, but people are signing these things, and I don't really think paying attention to it. They're trying to get through this fast, and a lot of times you'll hear, "Well, we got to do this now. Just sign it. And let's move on." Well, you're signing your life away on some of these things. For thousands and thousands and thousands of dollars in fees. Be careful. So send me your loan estimate. If you have a mortgage right now and it's over 4%, please send me your mortgage statement. You can cross out anything you don't want me to see. There shouldn't be anything on there other than your name, address, loan amount, rate, some other stuff. And let me know kind of what you think your credit score is. From there, I'll get back with you probably within an hour and tell you what I can or can't do. What I will tell you is I would like to get the process. I'm going to kind of contradict what I was saying just a little bit ago. I'd like to get the mortgage process going for you. I'm not going to wait till day of closing to tell you, the rate you're going to get. Basically, I'm going to get your application in the system, get you ready for me to lock. We won't order the appraisal. We'll just sit on the sidelines, okay, and wait for a dip in this market. It is going to come because of the volatility in the market right now. Rates are artificially increased to slow down the pace of a lot of things, plus to cushion for this wave of probably missed payments that people are going to make. Once we know how everything settles in, rates will come back down. They should be right now. Let's look at where we are. We're in unprecedented territories. We have never hit these ranges before. But if you're one of my clients, I locked you in between here and here. I still have a better rate for you than today. And the reason for it is, watch tomorrow and I'll explain to you exactly what's happening. It's kind of scary, but you're in a good position. I monitor this for you. You basically just put the application in and wait, and I'll send you an update every day if you need be. So my name is Dan Frio. I do the mortgage update every day. Why we watch this number here? This is bonds that trade. So when a mortgage is done, they wrap up all the mortgages, sell them on Wall Street or as investments to hedge funds and other investment firms. And the price of this bond and yield is what determines mortgage rates. Okay, we follow this right here. This is what's happening to the price of the bond. As the price increases, the rate of return or the yield or your mortgage rate decreases. So it's an inverse relationship. The higher this goes, the lower the rate. And right now, the rates are, well, let's put it this way. Mortgage-backed securities are at an all-time high, but mortgage rates are still higher than where we were here. And again, tomorrow I'm going to explain why. So hopefully I can be able to help to you. If you like the video, please give me a thumbs up. Don't forget to leave comments below. I'd love to hear your comments. I'd love to help you out. Most of the time I'm just going to reply saying, because I know you don't want me to, you wouldn't want me to say, hey, what's your social security number? Or, some other personal stuff on the questions below. So I say, either call me or shoot me an email. I'd love to help. And what else? So email me at dfrio@preferredrate.com. Give me a call at 844-775-LOAN. Other than that, come back tomorrow, please, and I'll explain to you exactly what's going on behind the scenes. God bless. Take care. See you tomorrow.